Recording. All right, so take it from the top again. So if we were looking at it on a monthly, right, you can easily identify an uptrend. Okay, knowing the fundamentals, we are bullish of NZD because I'll even show you. I believe you can go to Google, type in bullish metal currencies. Whatever. It's on Investopedia, right? Investopedia. They have it, right? All in this. So y'all can go and look at that. But they tell you, you know, NZD, if you're bullish on metals, blah, 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 bullish on NZD, okay? So now when we go and we dig deeper, okay, this is where we're going to start attacking and identifying, okay? So you can see if we can get real quick. It's just so funny, man. Okay, I'm not even going to identify that, but force candle down, bullish up. And you can just go straight across and see the accuracy of lines.
Okay. Jordan, sorry to stop you midway, but
Go.
I was just wondering what pair or what symbol was the marijuana stocks? Because I've been wanting to look at that for a while, but I just didn't know what pair or what symbol was.
It was AU. I forgot what it was. It's a Aura cannabis company. AUR. There it is. ACB.
Thank you for that.
Yeah. Okay, so and then mute. Okay, so remember we're on the weekly time frame. Okay. What we want to do is we want to pay attention to forced candles. Okay, when we're back testing forced candles. Not every forced candle. The forced candles that run away really fast, like this one. Okay. So the theory, smart money sells down to buy up. Okay. And remember, they can stay in drawdown for as long as they want because what we talked about earlier, they trade with bajillions, right? Smart money mitigates out of here. Okay. And they see your double top stop loss target. Okay. Now price runs up, obviously. Okay. And we're not going to go into too much detail of this, right? But it's like lines like this, right? Force candle down. It's big run up, like a fast run up. Okay. Mitigate here. Okay, like maybe bring that down a little bit. So it's like maybe you missed the mitigation if you were to be accurate, right? But this is just talking about it on the daily. Okay. It's funny how this lines up with back here, right? But let's go and we'll talk about actually in this area. Okay, so same thing, right? This candle down, bringing it over. Okay, same thing. This candle down, bringing it over. Right, and this is just on the bigger time frame. Okay, now to make a higher probable one, right? The one that makes a ton of sense that you never want to ignore is if structure was being broke. Okay, and I'll show you that as we get closer into it. Okay. Now, weekly order block. Okay, this is the bigger structure, right? Weekly order block. if people were looking at it on the weekly, they would use this as a stop loss. Bears or bulls would, right? The ones that are getting in late, okay? Or I wouldn't say the ones that are getting in late, but for this move to happen, okay? Okay. Remember that, stuff like that. Right? For that to happen, God, it's so confusing when they don't show up. Hold on. All right. Notice this. Okay, notice how we have this blue line marked on the daily as that force candle down, right? Notice the same thing on the weekly, force candle down. Okay? Now, in order for me to make a accurate area of where, because right now, what are we doing? We are speculating where smart money's playing, right? That's all we're doing, speculating where smart money's playing. I could see them selling down here, right? To buy up, okay? Because there's stop losses below here. Okay? So that force candle down, right? Mitigated out in this area, right? To buy. Okay? Forced stop losses. Let me go back and see exactly where that candle is on the weekly. Visibility, days. Okay. Okay. And so this is where it is on the daily, right? This is just funny. Okay. So you remember how we talked about they got to buy up to sell down and sell down to buy up, right? Okay, well here's a buy up off that body of that candle, right? Just a random green candle, just out of nowhere, and this bullish downtrend, just a random green candle, right? And this is on the daily, okay? But if we were to go and we were to like really dig into this area, just a random buy up candle, okay? Well, what's sitting right over that candle? That and that. And so maybe that could have been that forced down candle, right? To pick this up, to mitigate out, right? So what do they do to mitigate out of this, right? It's in here. Okay. And so what I'm showing you is how to accurately line up lines that are really telling the story, right? Smart money is telling the story. Let them tell it, not your retail M's and trends and W's and whatever else that we're taught in retail school. Okay. So now let's just keep up with these two lines. We've back tested this area of where smart money could have played. Okay, bringing it over into this area. Okay. So now, same thing. Okay. What are we identifying? Well, there's a push down, right, and a drastic run up. Okay. Not like this. And Bucci just push down, drastic run up, right? Mitigating out of here. Okay. Push down, run up, right? Still, if you look back, look at this. These little areas that they manipulate candles, they add up, they line up, right? Okay, so now we go into an even smaller time frame. Okay, I'm interested in this area. Okay, to line up and try to see what they did, right? But this was the area that we were interested in playing off this long trade with this example, right? So everything I'm showing you right now is me backtesting the bigger picture, right? Seeing where smart money is just mitigating in and out. Okay, if I'm long-term bull, then I got to find where to play the long-term bull play, right? Where's the last place that they can get in and out? Are you the blue lines where smart money puts a trade in? Yes, right? Whether it's a buy or a sell, I'm placing places where they are playing, whether they're forcing a candle out and they got to mitigate out, and vice versa, right? So it's like for I guess another example. Okay. Remember that daily force candle down? This is the 4 hour, right? Smart money selling down. What are they doing? Stopping these people out right here, right underneath. They force down. They buy here. They got to mitigate out, right? Okay. So that's the bias, right? Long-term bullish. Okay, so now this is where we were playing. Okay, so if you want to like exactly see the chart markup, um, was here. Okay, in this area, right? So this was the markup at the beginning of the week. Okay. I forgot what line that's on. Is it the weekly? Yeah. Okay, so see this, right? That force down, okay, and then a massive up, right? That's another force candle down. Smart money sold somewhere in here. Okay, they got to mitigate out, right? Because they're pushing price down. Get out of here, right? They're constantly hedging. They got to They got to make the market, right? The market makers make the market. They got to constantly hedge because guess what? If they didn't, if it was just all retail traders trading, this is what the market would look like. This is just retail trading, right? We're poor. Okay, we can't print candlesticks. Okay, but guess what? If we trade with smart money the entire time, we'll get rich like they do. Okay, and that's what we're doing. That's all we're identifying is identifying where they play. So now let me get this all up and added to you together. Okay, so that image that you were looking at was like right here or something when we were deciding to play, right? So take away all this data. Regardless, we missed the trade by 4 pips, right? But it's the accuracy that is involved with this, okay? Because what's the idea, right? The idea is, remember, what do you see up here? An M? Batman ears going on up here, right? This M, okay? Look at this. Look at that M, right? And so that was the target, right? Because the idea is that there's a pocket of money up here that'll flip orders to a buy, right? Because there's stop losses up here, right? If you were going to sell anywhere in here, where's your stop loss going to go, guys? Right? If that was your direction, be right here, right? You want to get even more detailed into this? Look at this. So that was the plan, right? This area. What is it? Okay. Okay, so remember this force down candle right here? get it accurate. Right on the body. Right there. Force down candle, 4 hour, right? Upwards movement, that line. Okay. So that was the original thought. Where do you think it would have taken out? Stops right here, right? At the time, stops right here, right? And so even my original thinking of that was this. We were playing small trades, okay? We're on the 15-minute time frame now. Watch this. Smart money buys right here, right? Well, you're saying, Jordan, how do you know that? I don't. I'm just guessing, right? But guess what? It would make sense for smart money to buy right here and shitting on these people that decided to sell right here, looking for that double top area back here, right? This big wick, right? Retail's favorite time frame to trade on is the 15-minute, right? This is where you would put your stop loss if you sold in any of this, right? Did you take profit? I have no idea, right? And then all of a sudden they're like, huh, screw all y'all, buy, stop you out. Price comes down. Well, guess what? Maybe they sold more right here, right? I don't know. But what I do know, if this is all true and they did buy up to stop out those people, they have to mitigate out of that buy, right? Look where that accuracy is, right? This is all called out in the Trade House chat too and my IG, right? So what do? We sold it down. What we sold it down to? Okay, well, do you see a W? Because I see a retail W. I just gotta find my arrow tool.
Sorry, Jordan, are you saying that you trade against what the retail are doing at the moment then?
The entire time.
Right, okay.
Right? Because it's like once you accept and get the understanding that these institutions, smart money, whales, whatever name you want to give them, once you
Yeah.
accept that they trade with so much money, they have to trade like I'm showing you. Market makers do not use stop losses. What's the point? You're not going to be able to get to it, right? They got to make the market. The market's not going to go against them, right? So now we start lining up where they're trading, right? Because they know the bigger picture, right? So they're going to mitigate price up and down to certain areas, right? We just got to find their story. They leave little footprints when they trade,
Right.
right? Now, watch this, okay? So we had this sell there where they mitigated, right? And price pulled down. Our buy was right here, our buy limit, right? We missed it by like 4 or 5 pips. Okay, kind of sucked. Okay, but watch this. Watch when you put this, okay, on the side with this image, which y'all should all have. Do y'all see it? Okay, so it's just like, cool. What were we looking for, guys? We were looking for the spring, right? This was the spring that we were looking for. Ah, damn, we missed it by 4 pips, but that's what we were going off of, right? Everything makes sense, right? This is where the stop losses could be to pick up orders, right? We literally dipped right on that. We didn't go below it, so sucked, right? Where was the order block that we were aiming for? Right? Top of that line. Okay. And so that's the reason why. But yeah, it was making a little accumulation form. So you just pay attention to wick candle or force candles and stuff. here's the next one, right? This one, I only talked about it with Zach. I didn't call it out, but at least you can.
Sorry, Jordan.
What's up?
I'm trying to understand what you're saying, but I'm getting just a bit confused. I understand, like you're saying, with smart money, they buy up to sell down to buy up. But what do you mean by that specifically then?
Okay. Let me explain it to you in this one.
Okay.
I think you'll like this one a lot more. Okay. I won't spend much time like showing and back testing all this, because as far as like I don't understand right now the fundamentals of the European Union, right? I don't get the big picture of what's going on in y'all's area. I don't know if they're trying to get rid of the euro or what long term. I can't figure it out. I don't know if GB or if Brexit. I feel like Brexit was like a scam, just like a whatever, like distraction, right? But whatever. So fundamentally, long term, I don't know the direction of this pair. Okay, but what I can show you is this. Okay, so last night, right? This is what I was looking at. Okay, I was looking at before any of these moves. I was looking at this. Okay, same thing, right? Same thing that we talked about last time, right? Except we went down through it. Okay, that's a wick, right? It's another wick. Okay, so stop losses would sit around there, right? Just like stop loss would sit around here. Okay, so right now I'm identifying where retail stop losses would be.
Sorry, those red markers that you put, they would be what? Retail stop losses.
Yeah,
so
yeah,
where
yeah.
people, okay.
Yeah, see, I'm just making like putting like X's.
Okay.
Okay, it's like same thing as up here, right? I can draw a line across. Stop losses in this area. It's like a pocket of money, right? Because remember what I said, if price gets to that area and there's a bunch of stop losses there, they're going to flip the switch, right? So it's like if they were trying to buy here, right? Now they're in drawdown and their stop losses there, they flip to a sell. Same thing here. They sell, right? If they're selling all in here and their stop losses are up here, price hits it, they flip to a buy, right? That's why you'll all of a sudden see like a pop when it goes underneath. And then you always question, why wasn't there a pop when it goes below, when it goes above it and then spikes down, right? So on a smaller time frame, this is when you really start seeing this in detail. Okay, so let me explain to you what I see. Okay, so first of all, I'll tell you right now that I got the trade wrong, right? And what I mean by wrong is you're looking at the accuracy that we're talking about, right? These trades that we're talking about are being sniped. 10 pip stop losses, 15 pip stop losses, 20 pip stop losses, right? So that's what we're looking for. Okay? So the difference between here is that I bought off the 4-hour order block and I knew that there was a 1-hour order block right here. Right? Notice the difference. Price slams down, instantly buys up, right? Price slams down, instantly buys up, but the candlesticks are different, right? And as you can see, look at the accuracy difference. Okay, now let me show you my mindset behind all this. Okay, and then I'll really do it like I did in IML TV today. Okay, so imagine this: smart money sells down right here, right? They just sold 50 million of their position, right? They just sold 50 million share size. Okay, bringing the price down a little bit. They just bought right here at the bottom of the green candle, say 300 million. I'm just putting in random numbers that come to my head because it makes it make sense, right? So buy sell. Okay, so now they're in drawdown in their sell position, right? Since it's in drawdown. Okay, but their buy position is in profits. Okay, so what if they were to do stuff like this? What if they were to take some profit off the table here of their $3 million position, right? Because remember, they can't trade like us, right? They can't just buy and sell, take profit, and just get out of their position instantly, right? Because they'll have a shitty average position. That they'll have an average take profit, they'll have an average stop loss, or an average entry, right? They can't have average entries and exits. They got to have good ones. So the only way for to do that is if they take little bits of pieces of profit off the table, right? So they don't cause drastic falls. Okay, so TP some here. Okay, in this consolidation, they TP'd some here. I'll make it green. Yay, right? But guess what? Retail does not trade in this. Okay, retail missed the buy. You know where they buy? They buy here because they're chasing it, right? They're chasing on the pullback. Okay, I even know if, watch, that's probably even the 38 too. Yep. All right, price continuation zone, right? Buy the continuation. Okay. Price comes up. I'm not bashing on the people that trade this. If it works and they're profitable, then it works. Okay? But I'm showing you smart money's how they play it, or at least how in my mind they play it, and it works, and it works fantastically, and the accuracy is stupid. Okay? So they take some profit here, right? Wouldn't you know if they take some profit here, price is going to slam down, okay? Making a wick, okay? Probably stopping out the buys here because they stop loss break even, tight stop losses. Funny how we go underneath, okay? Price comes up, awesome. Now what I want you to notice is this candle, okay? This candle right here, this motherfucker. Forced sell down, right? Because guess what, guys? They're not done taking profit. They need to take some more profit. Okay, this position has not taken profit a lot. All right, so we need to take some profit here. Okay, so what's going on? Well, this sell, right? Bring it down a little bit so it can be more accurate. Hold on. Okay. Okay, so you notice how that barely, or that didn't wick right there? That's completely fine. Okay, we read our info off the candle to the wick. Okay, but your body is where the majority of trading happens. Okay, so your body is the majority of trading happens in here, but for a bullish order block, we go off the top of the body to the wick, right? For a bearish order block, we go off the bottom of the body to the wick. Okay, but for me, I just use the lines, whether I miss it or I don't, whatever. Okay, so as you can see, what they sold down, right? Imagine how many people bought in here. Okay, would be funny to see how many people sold in this area looking for stupid head and shoulders. Okay, but force candle, that got my attention, that force candle down, because what does that do? That frees up a bunch of money for them to spend their money, right? If they free up our stop losses, they can capture our liquidity and flip price the other way and make more profit, right? Remember, if they're trading the same like we do, they risk 1% to make 2, they risk 2% to make 8, right? Their 1, 2, 3% that they're risking is just huge compared to ours, and so they got to trade differently, but they're still looking for the same agenda we are, making profit, right? They got to get their bonuses, they got to get paid out. They're all in salary anyway. Okay. But that kind of makes sense, right? And so then it's just funny, right? We take some more profit here. If they didn't finish up there, cool. So now what? Price is done. Price is done distributing. Right? You got a climax. We go down. Right? Automatic reaction. We go up. We go down. Ah, sign of weakness, guys. Right? We go back up. UT. Up thrust. Consolidate. Consolidate. Right? Sign of weakness is down here, same as the image. Okay. And you know what? In all honesty, this probably will freaking continue going down. Right? Like I said, I don't know what's going on with the euro, but it's not good. Okay, and I'm bullish on NZD. Right? But at least this shows you how smart money is getting in and out.
So, Jordan, where do you put then your entries then? If you see this happening now, where do you put your entries then with smart money?
I bought here. Or I guess essentially tried to buy here, but this was like 4 in the morning and I wasn't awake.
Right.
Okay, but I like to buy and sell where they're mitigating out of their position because I can read what they're doing, and then if I can guess where they're mitigating out, so like you're
So, can you explain to me just what do you mean by mitigate then?
mitigate. Like this, watch. All right. So remember this. They're in a 5 million sell position, right? And a 30 million buy, okay? That 50 million sell is all in drawdown from all here. This is all in drawdown. They don't care. They're taking profits off their buy, right? So down here, what is this? This is that $50 million position rescue mission. Right? Is that
So what are you saying that they're selling 50 million even though they're making a loss at the moment?
Yeah. Okay, so think about it, right? They're doing the same thing we are, risking 1% of the account to make 2% of the account to make 4, all that stuff, right?
Yeah.
Okay, well their difference is that they have millions and billions in their account, so they can hold drawdown for years.
Okay, so they can keep selling essentially then, keep going down.
Oh yeah, look at this. See if I can find it. Yeah. So this order block right here, this one.
Yeah.
Okay. And this play back here, force candle down, sell, right? See the blue line?
Yeah.
I'll even draw it. Right? See that? See it? See that? That little bitty wick right there. You see it? Little bitty wick. That little doji, right? Force sell down to buy up. The mitigation out right here. Okay, we bring that over. Look at that. And this was 05, 08, 14. Right? So they can hold drawdown. They can hold drawdown for so long. Right? Because eventually they'll get out. Or
so essentially
they'll be bailed out.
Selling.
What?
So essentially they can just keep going, just keep selling then.
Yeah, well they keep holding their buy. It's like their buy. So it's like this. So it's like they would buy in here and then they would sell right? So their buy position is in drawdown, essentially, right? So they can get some of their buy out of here, but they're capitalizing off their sell. They can get some more of their buyout, and then get the majority of their buyout, right? But they're, as you can see, the sell position is winning. So as long as they're breaking even, getting close to breaking even on their mitigating prices, they don't care. They're making the profit back on their ones that are going right.
So they don't mind taking a bit of a loss, as they know in the future they're going to make that money back, essentially.
Yeah, that's the theory behind it. Right, so that's what I was saying. So it's like how I explain it on IMLTV is that they sold 50 million, they bought 3 million or 300 million, right? Their buy of their 300 million buy is that lot size, right? So imagine a 50 million divided by 1,000, so it'd be like a 50,000 lot size buy.
Mark.
And then this would be a shit. Oops, my bad. What was it? 300. I fucked up. Okay, so this would be a 50,000 lot size sell. This would be a 300,000 lot size buy. I guess I should have talked about lot sizes because it would have made it easier to explain. And so now their 50,000 lot size sell is in drawdown, right? Because they're buying. But it's like, do the math. Like, you really think that sell is going to matter?
No.
50,000 lot size rescue mission. Right? So they're on a rescue mission to rescue that drawdown position. So that's what they do. Right? I know it's a whole different concept, whole different way of looking at it.
Yeah.
But this is exactly why. Like, they're not going to teach you how they trade. You would win, or you would understand, and you can trade with them. Right? And so if you can add on take everything that you know, right? Use that as a tool, a target, right? Everything that you've learned from pennants to flags to double tops and double bottoms, everything that you've learned in the retail world, perfect. Use that. Now use that as, okay, where's retail trading? Where are their stop losses? Where are the banks trading? Right? Now identify both parties. Identify the bigger picture, and now figure out, okay, I will always buy when I see smart money buying, or I will always sell when I see smart money selling. Right? Off the bigger picture. And then you buy when they mitigate out of their position. So right here, when we're on a 50,000 lot size rescue mission, that's how they mitigate out. Because mitigation means they got to get out of their drawdown position at close to break even as possible.
So that's when you put a so like here with the 300,000 lot size buy, that's when you would put a buy as well then.
Nope, because I wouldn't have known this was going to happen.
Right.
Right? All I know, like this is all I knew when I was doing it. That's all I know. That's the story. Right?
Okay.
You can even go as far as the story of this, if you can understand it. Right? If we could have understood right here that, okay, I see where smart money manipulated, right? We could have read all this, okay? And we could have saw that there was a forced candle right here to take that out, right? So, same story, right here is the same story right here. The only difference
This
is
smart money are the ones, sorry, selling it down, so they're pushing price down at the moment to force go back up.
yes, because that's the only way they can take positions according to their size. Because if they traded like we do, then smart money would have bought like right here off this double top or triple top, right? You see it? See how it just right here? See, you have a support, right? Here's your support and resistance,
Yeah.
right? That's if they traded like us, they would have been like, "Oh, consolidation, buy off the resistance line or the support line," right?
Yeah.
Okay, well that's what retail did. Okay, this is Asian session consolidation, right? This happens all the freaking time, right? We pop down to London, right? And we buy up, right? Because what is this doing? I need you to really think of this for a second. Over here in the States, Asian session is like the lazy man trading session, right? Everyone can be awake for that. You don't have to worry about a job because you're probably off work, right? You're just bored. Okay? This is where people get trapped and shit on, right? So your noobs are buying, their stop losses below the low, or yeah, how would they even justify a stop loss here? Right? You'd look left and be like, fuck, but I gotta go what, here? Hell no. I'm gonna guess. Either that or they're not gonna change really anything, and when they see this profit, stop loss break even. Right? Yeah. Everyone is taught to change your stop loss stuff. So yeah, so this is what you would see. Price gets forced down to buy. So we're like, shit. Okay, so we saw this. Okay, if we played the Asian session consolidation, false breakout, go the other way, which is we played a lot, right? You can save this image.
After 10 o'clock, we can hear all your conversation with the person you're speaking to. Oh, because I had a loud bang, sorry. Yeah, we were banging on the floor to say. Oh, okay, I thought Ina was banging on the door. No, oh, sorry. It's Lisa's. Oh, Lisa. Okay, sorry, yeah. After 10, everybody's asleep. Okay, sorry, yeah. That's right. Can you turn it down? Yeah, no, that's fine. Sorry, I had that loud bang and I thought someone was banging the door. No, we were banging the floor. Okay, sorry, I couldn't understand.
Getting these billion-dollar nuggets.
Sorry.
Oh, you're good. But do you see this example right here? Asian session range?
Yeah.
The fake out? Right? Asian session range. Fake out. They're calling it a turtle soup stop raid. Turtle soup stop raid, if you want to call it that. Right? And then it goes the other way, right? And then it goes the other way. Right? And then it makes a stupid mountain. Then it makes a stupid mountain. Right? You see the mountain? This whole here. I got y'all, fam. The mountain. Right? Asian session consolidation, Asian high, Asian low, Asian session consolidation, right? So we could have played that if that's what you were going for, that identification, right? But I doubt I would have been able to see it. I probably would have seen it after the fact. But that's how we would identify it. Maybe you could identify this forced down candle and played off the buy limit here on the line, right, to push price up, to take profit more for the banks back here, right? But ultimately, we would have looked at all this and been like, okay, their stop loss is waiting all below here, and smart money needs to mitigate and go on a rescue mission to get their 50,000 lot size out. So we got to call in the Navy SEALs to rescue this position out. So, of course, what do? They're like, all right, guys, we got to rescue this position out. And so they come in and rescue it out.
So, sorry, my question is now, Jordan, where do you now put your entry then? Do you wait for this pattern to happen and then put your entry?
Yeah, your entry is right here where they have to get out of their lot size. Like that's out of this whole picture, that's where we know they're in drawdown. Is in here. is in this zone. They're in drawdown all in this zone because they force sold. Right? Get it?
Yeah.
They force sold, then a buy happened. That sell's still in drawdown. They're in drawdown for the 16th, 17th, 18th, 19th, 20, 21. They're in drawdown for like a week. Right? And so what do? They get themselves out of here. Now, if this price was to continue up, the theory is that just because they got out of their sell position doesn't mean that they didn't go and buy more, right? They probably did. If this was to continue up, right? That's probably what they did, was buy more in here. But that would be our position to play, okay? And then where would we target? You would target this. I would put a stop loss right here if I was retail. I'd put a stop loss right here if I was retail. And I'd definitely put stop losses all up in here if I was retail. Right? Because of these wicks. That's all retail does. Look at the past wick, guys. Look left. Use it. Use it. Use it. Okay, person who teaches the same content to the world and they still lose. Right? And so that's where your buy would be, is down here. Right? And then you would take profit on however you please. Okay?
Okay.
I like understand this is a lot of info to take in, and it's against what you're taught. Right? Just like anything. Right? Just like entrepreneurship, it's against what you're taught. You're taught to go to school and not have ideas, right? Go work for someone else who has the ideas that are already established. At least over here in the States, that's what we're taught. I assume for you guys too, because y'all are the UK and Europe and stuff is a part of the ugly scam that goes on in the world, just like America, because they're controlled by the same people, right? And so you got to understand that this world is set up for us to serve and lose. Okay? And when you accept that, then you start asking questions like what I do here in the States. Why is our education system like the bottom 30? Why are we so dumb? Why are we dumbed down on purpose? Right? Why do we have this stupid ass patent system that the other side of the world doesn't use? Okay? It's to keep the monopoly going, right? To keep you serving. Okay? They're not going to let you win and learn how to trade. Okay? Guess what? They probably invented this website for a reason. Okay? And so the one thing that you won't be taught really anywhere is how smart money trades, because then how are they going to trade now? But it's the hardest concept to understand what's going on unless you really trade with that amount of money to really see it. Right? You got to use your imagination. Right? And accept that this isn't a free market. This is a controlled market, and it's controlled by these large players. And if you want to win, you got to play with them. Right? It's like this. Go back, do this for me, guys. Go back and backtest. Okay? I want you to do this. Okay? I want you to go on a 4-hour time frame. Okay? And I want you to, if you have replay mode, awesome. Go back and start it on replay mode. Okay? If you don't have it on replay mode, just try to use your imagination, but go left to right. Instead of right to left, go left to right and do this. Go, okay. If I was to trade in here, I would put a stop loss here. I'd put a stop loss maybe here. If I was to be a bear, if I was to be a bull, I'd put stop losses all in here. Right? All in here. See these lines? Right? right?
Yeah.
And then just let it go, right? And then watch how price always comes to take your stop loss and go the other way, right? So now what we start doing is we start playing above the stop loss, okay, and try to look for places where we would identify, right? So it's like stop losses all right here, right? Stop losses even right here. Those stop losses are being taken out, okay? What do you know? We just pulled away from where they all got stopped out at, right? It's like same thing like right here. If you were at a buy, where would your stop loss be on a buy? Right underneath it. You just got taken out, right? So you just start following it, right? And then start trying to flip your head around that, because remember, smart money targets stop losses. You should start targeting stop losses. And like the fact that you just know where lots of pockets of money exist, right? So do that for homework, right? Just back test that way. Okay. It's like for like what's going on right now. Okay. Stop losses would be right here, right above that high, right? Okay. If you're gonna sell, right? Selling the junk above it, right? This is people getting crapped on. Right? Stop loss, where people get stopped out. Right? That's where my sell is, at least. Right? Same thing right here. Look at this shit. Look at this entry, people. Right? Where's your stop losses? I found them. Okay? Why pick this area? Buy candle up. Fast down. Right? So maybe there's a buy there that held in drawdown forever. Right? Because they can afford to hold in drawdown forever. Right? And so that was where to play.
So Jordan, how do you know if smart money or the banks are going to sell or buy then, essentially? How do you know they're going to do that first?
Because the theory is that they have to free up money. Right?
Right.
So like to make it here. This one was really clean. I like this one a lot. I put this in y'all's chat too. Right? So that's a smart money play. How did I identify that?
Yeah.
Right? It's when you see fast moves like this, right? If you see a random candlestick down or random like this, or if it's flipped the other way to where it's going straight down, but you see a random buy and then straight down, like I love how I just know examples everywhere, like this. Look at that accuracy, right? Price is moving down fast, and smart money's like, fuck, it's moving without us. All right, guys, we got to buy, sell. Right? So buys in drawdown, right? They took a bigger sell, right? We got to go on a rescue mission and save the buy. All right, we saved the buy. All right, get the fuck out of here. Right? That's literally it. Same thing here, right? This is the opposite direction. Price is moving up fast, right? Oh, fuck, we missed the direction. All right, so we got to sell down to buy. Well, guys, our sell is in drawdown. We got to go on a rescue mission to save the sell. All right, let's bring this down, but let's create an M so retards sell it. All right, Sounds good, right?
So, Jordan, what you're essentially saying here there is they see that this buy is happening, but they're like, shit, we haven't got onto it, so we need to sell it down to have a retest until we can buy into it.
Yeah.
So they're essentially like forcing the market to go in the way that they want to.
Yeah, because that's the only way they can pick up shares in their amount of shares that they need, right? This is the biggest, like, this is the only thing that can teach you is this right here. If we were in a consolidating market, okay,
Yeah.
they play with too many shares. They play with too many lot sizes, right? So if they instant buy or instant sell and they don't force out us retail people, they're going to get a terrible average position if they sell or if they buy, right? They got to do some fake out crap. They trade with too much money. They have to. 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 Right? Look at that. It's like their same freaking. God. It's just too funny, man. So funny. But it's like the same thing as Euro NZD, right? They got to push price up so they can distribute in their area, right? This was them pushing price up, right? This is all their buys. Right? Until eventually they're out of their distributing phase, right? And we sell. But see, we were just able to identify this buy, right? And then it's just, it adds up. Like, watch this. So this sell, right? Where this smart money order block would be for this buy right here, right? It's the same thing, same time that we were trading here. Okay? What did we identify? Watch this. This is funny. On Friday,
So what time frame can you enter these trades in? Do you have to enter like on the weekly, daily, or can you go straight down to like the 15-minute, like you're now?
on this one I entered on the 1 minute.
On the 1 minute, right? And do you do a market execution or like a?
I don't do limits. I think pendings are stupid.
So you do market execution.
Yeah.
Jordan, why are pending stupid?
Because I can't. Like, it's like this. So I bash on swipe trades all the time because what are you taught, right? It's like, okay, so you'll do a measurement for fibs, right? Price is coming down. You're like, okay, I'm gonna put a limit on the 61.8. I'm gonna guess.
Yeah.
I'm gonna go to sleep. Either it hits my stop loss and gets me in, or it doesn't, right?
Yeah.
Screw that. Why not set an alarm here? Right, the 61.8 alarm goes off. Now you go to your computer and you watch the price action, so you know if whether price is going to shoot through the 61.8,
Okay.
or if we're just gonna sit here and actually hug it. Because if we hug it,
Sure.
the price is going to reverse, right? Like,
Sure.
like when I say hug it, I mean this. Like, you hug it. That's why.
So with this type of trading, Jordan, sorry, do you have to use like Fibonacci, using like all indicators, or is it just literally just looking at price?
It's you use whatever you're comfortable with. I'm just helping you identify where smart money is playing, right? So you can be an indicator-based trader, right? You could be comfortable with that. I'm not here to bash on indicators, right? If you have a profitable system, don't change it. right?
Yeah.
But what will help you so much is learning how smart money trades, because for some reason retail loses 96% of the time. So why continue trading like the retail? Why continue doing the same thing over and over again if you're not getting results? Right? Just like the masses does in retail, right? Low key IML teaches retail. Right? That's what that's what everybody teaches, because no one knows better. Right? But it doesn't work. So let's change it, right? All you got to do is find a freaking person who trades in the institutional bank thing, get it, and there's your mentor, right? And then he points this stuff out to you, and you're like, holy shit, makes sense. All right, bet. And that's all it took.
Jordan, have you had any interactions with institutional traders who validate what you say as well?
Yes.
Cool.
Yes, even Eddie Viteri validates this.
Really?
So yeah, that's what he's about to drop all of this in his next course. We already got it.
Nice. Perfect.
Yeah, so it's
You
like,
got the new course already?
No, we don't have the new course. This is what he's teaching, though.
I see.
Because that's the big ticker that no one can comprehend in their mind, is that smart money trades with so much money that they have to trade this way. And the theory behind it all is that that's the only way they can take positions according to their account size, is if they sell to buy and they buy to sell. Because when they do that, it frees up so much more money. Right? See. And you'll learn that from just staring at that Coinbase blockchain, or the Coinbase exchange, right? But this was it. On Friday, I saw this. Right? This seemed like an accumulation phase on the 1 minute. Right? You got your test, spring, up. So that's what I saw, and I was like, crap. I was like, I think I missed it. And then all of a sudden I saw this candle. Right? That candle right there, that red candle.
Yeah.
Force down candle, right? Looks like it. Right? And then all of a sudden I see this run away really fast. And I was like, shit. I was like, do order blocks really work on the 1 minute time frame? It's like, they can't be. No way. And so then all of a sudden...
Is that considered an order block then, what you just said there? A red candle pushing down and then a green block with candles coming up?
Yep, because it's an order block. This is smart money ordering. Right? They sold down to buy more up. So that's their order block. They sold down to buy more up. So this is their order block. It's a more accurate way to justify your supply and demand zones. So instead of having supply and demand zones everywhere, however you were taught to draw them, instead you have smart money supply and demand zones, where smart money plays. Right? And so then we just watch how this candlestick reacts. We end up buying. We hold the buy. We stretch this across. Does it come back? Look at that. Does it come back again? Goes right through it. Goes right through it. Goes right through it. Goes right through it. And we come. We explode. Right? And so it's just really different when you're watching on the 1 minute. Okay? But what I wanted to show is this. So you remember this? On DXY? That was this. Right here.
Right.
Right? So you're comparing charts. Right? So it's just a good place to TP. Because obviously, price was going to react right here on the dollar and target up here. And that's what it did. And so when it did that there, it yanked this sucker back down, right to the buy area. Right? It's like the same thing here. Right? Where's your stop losses? All in here. Stop losses all in here. Okay, so where's an area that'll free up money and shit on everyone? All in here. All right, let's stop out everybody. Okay. Same shit, right? That we just went in Forex. It happens in every single market, right? You have your buy up before your fast candle down.
The market's basically just one big stop hunt by the looks of things.
Yeah, it is. And that's why we lose all the time.
Mm.
And so now it's like when you shift your mindset to, it's like, okay, they're always screwing everyone over anyway. So it's like, okay, what are they playing at? Let's just trade with them. Screw it. That's it. And then you just sit there and wait. IMLTV had this entry. IMLTV had same thing. Had this one, and it's all the same. It's all the same stuff. Even though we lost here, or we didn't lose, but we missed it by 4-5 pips. It's the same mentality, right?
Is this what you show on IML TV then, Jordan?
Yeah. Yeah, this is how we teach to trade. Yeah, this is how me and Zach trade and teach. This is how Rock and Sandy trades and teaches as well. Right? And it'll raise your probability up more. I guarantee you'll profit a lot easier, right? Because it's like, okay, guys, if you were to buy anywhere here at Euro USD, where would you buy? Okay, well, I would rather take my chances at buying below here or below here. If I'm going to buy, right? Because stop losses would be here, stop losses would be here, right? So I have a high probable chance of going and dipping up underneath and then going, right? If I'm going to try. But it's hard to accept because it is completely different to where we've been taught. But that's okay, because that's how you know it works.
Do you just mind showing us one more time, Jordan, on a different pair?
See here. I can show you on like past markups that I have saved.
Okay, yeah.
Maybe I can find it. Okay, so here's one, and it looks the same as the DXY that I showed, right? So what would you do? You would, right? Market moved really fast, right? This was news. This candlestick was news, or this whole move was news.
Yeah.
Okay, so no one can predict news. So all this shit's happening. Smart money comes in and like, fuck, we're late. Buy, sell. They got to mitigate out of their buy. They do it there, right? And we slam it down. I like this one, but I can't show you because it's too far back. Is that it? I can't remember. I'm trying not to pull up my image so I can find it.
Okay. So you can use this in order with your strategy then, in order to see how smart money works, essentially. So this.
Yeah. This everything I'm showing you is showing you how smart money trades.
Right.
I just can't find. Maybe it's not on this pair. Okay, yeah, it is all right here. I don't think this is an example, but this will work. So, can y'all annotate?
Should be able to.
Okay, cool. Annotate where the order block is, where smart money forced a candle a certain way and then mitigated out of their position. Why?
Is that correct?
Why? But can you explain it? Like, why would
Okay,
it be
so
correct?
you saw the market going up, and then there was a red candle there, so that would be the smart money selling the candle in order to go up again.
Right. Right here?
Yeah,
Right there, right?
yeah.
Okay. Now, can you see another one?
Coming down, there's one green candle there in order to come down again.
Okay. You would be able to try off that one. The only one that would get out is right there. See it? See that little doji?
Yeah.
Okay. This is the one I was pointing at. Okay. To make the because you see a lot of up candles before a big down move, and you see a lot of down candles before a big up move. I know that, right? But to guess and find out, because that's all we're doing is guessing or speculating, right? The higher probable chance of it being right is if it's being forced to stop people out. Okay?
Mm-hmm.
So you see that? You see how we are in a downtrend? Right?
Mm-hmm.
Oh my god, guys, we broke the downtrend. Right? What are they going to do? Buy the break? I promise you they will. Right?
Mm.
Where's their stop loss? Right here. Okay. And so what makes this order block right here a high probability one is because we pretty much can see smart money selling down to fuck over everyone here.
So by them selling down, everyone that had a stop loss there, Jordan, would exit the trade essentially.
Yeah. And what it would do is it would cause you to buy your position back, right? So what are they doing right here if they're entering and playing this area and their stop loss is there, they're playing the buy. Okay? So they're playing the buy, right? Okay, so they're playing the buy. They say they bought, I don't know, say they bought here, right? And their stop loss is here and they're winning, okay? And then say the huge noobs are...
But those red lines there, are you talking about the market now? Sorry, talking about the banks, or are you talking about retail?
Okay, sorry. All right, so let's just say retail bought in here.
Yeah.
Okay. Their stop loss would be here.
Yeah.
Right? And your slow trend breakout people would buy here. Right? Same thing. Their stop loss is going in the exact same spot. Okay? That's why it's good to know like all the trading strategies out there. Right? It's good to know all the popular ways of trading and just how the majority of idiots do it. Because now you can use them as targets. You can know what they're... This... I hate to bash and shit like that, but trend breakout trading, right? You see this little channel, right? And all of a sudden it breaks it and you buy it, right? That is the lazy man's way of trading.
Mm-hmm.
Okay, that is retail's lazy way of trading. It does work. It can work. I can't prove you that you're gonna get sustainable returns consistently and like withdrawals to change your life, right? But I can guarantee that with what I'm showing you with the smart money, because obviously trading like this has changed their life. Because this is how they're trading, right? And all this is doing is taking money away from people that are trading the wrong way, right? And you just are able to identify what smart money is doing. So it's like, even if this happens, right? Sometimes this can happen. Okay, you have a W, and say you bought here, right? Here, make it easier. So say you bought here, right? And price continues to go up, right? And it works. Awesome. Okay, you can still trade the same way you do. But now I'm hoping that you see something like that, and then all of a sudden a forced candle happens, and you're trading that W or whatever, right? And you're stopped out, and then all of a sudden you see this head ass shit where it's just like comes in and captures it and then goes, right? And hopefully, instead of being butthurt, you can understand, well, they forced the candle here, and there was a spring created, right? Because we have the seller's test, or seller's climax, seller's test, right? Spring, accumulation, go. Maybe we can be like, okay, well, I see their down candle here, their forced down candle. Maybe we can end up buying back here, right? But you're not going to be butthurt and think that you lost because you suck or anything like that. It's now you understand.
Jordan, how long did it take you to understand how smart money worked then?
Years. I really started understanding it last year, and I'm coming to you now to teach it to you. It took forever to, like, I was taught this in 2016 and didn't understand it until 2018. And it was just trial and error, because you got to experience it yourself in order to believe it, right? Right now, you've been taught so many other ways that conflict of what I'm teaching you. And so now it's hard to disbelieve it. It's like, the entire masses is taught one thing, and it's so hard to stand up against the masses because you feel like you're wrong, but really you're right and everyone else is wrong, and that's just the system that we're led to believe. Right? Is this it? No, this is it. See? This is the example I was trying to look for, but I couldn't find it. But do you understand this one?
Yeah, I see that.
Yeah?
Yeah.
Right. And the reason why I talk like the way I do is because I feel like it's easier to understand. Like when I do this, retail would chase M's, right? Guess where their stop losses would be? Noob stop losses. Okay? They got crapped on. All right, noob stop losses. Well, they got crapped on here. All right, noob stop losses. All right, well, they got crapped on here. And then guess what? Up here, right? The same practice that we talked about, right? We can identify where smart money can buy to stop out these people on purpose, right? So what they do? They bought here. Oh, that was terrible.
Sorry, Jordan, just to go back to your previous example. So smart money would see retail selling here. They would see that people... Oh.
I'm going back to the previous example.
Okay. So I was just looking at on the other chart. You'd see... So they sell that with the M. You put your stop loss there. So you see that they would see that retail have put their stop loss there, and they want to buy. So in order to do that, they need to sell first and then buy. So that would push up all those people out there.
All right, we're talking about this one, right?
Yeah. So what my understanding is that so retail's here. They put their stop loss there, so they're selling here, selling here. Smart money or the banks realize that they want to sell as well. So they sell first, and then they want to buy. Sorry. So in order to do that, they sell first and then they buy. So then all these people here get pushed out.
Where? Okay, so annotate it on the chart.
Right. Okay. So what I'm saying is, you see, retail's selling here,
Okay.
and like you said, they put a stop loss here.
Yes.
So some people will trade this bit of sale, but also it's going down again. Now, is smart money saying, right, they see it's going down, but we want to buy. So to do that, they sell a bit first and then buy like that. So then if they're buying up here, all the people that had a stop loss here would get closed out.
Yes. But to follow their story, remember they already are playing, right? So they already sold here on that red candle, right? And bought here on that green candle.
Yeah.
Right? So now they got to mitigate out of that sell position, right? Because remember they sold on this red candle, right? So you stretch that across, right? This would be that area, okay? But remember, when I talked about we play it off the top of that wick to the body. Remember when I said the majority of the trading action is in the body of the candle?
Yeah.
Right? But for the bullish order block, we go from the top of the body to that wick, right? Which would be all right here. Okay, and that was the buy to get out. That was their sell. That was them getting out of their sell. And we can guess that when they do get out of their sell, that they buy as well. So it's like they sell buy.
Okay, so they've sold here to mitigate that. They bought here, and what, they buy again here to get rid of the sell here.
Yep, go ahead and mark it all up again, because I didn't see
Okay,
your
so
mitigation.
all right. So what you're saying is they're selling down here.
Yep.
Okay. Now they're buying up here. Now this is what's happening to market.
Yep.
So obviously, if they bought here, would they have mitigated this then bit? Because obviously they've bought up a lot here then.
Okay, so check this out. So imagine their take profit being right here.
Okay, this is retail, yeah?
No, this is smart money.
This is smart money, right?
Right? Imagine their take profits up there. So now, since they have such a big take profit on their shares, because they're not taking profit on all their shares, right? It's basically all of a sudden they just have a fucking supply block up there, right? So they just have all of their contracts sitting at the same line, and they're not letting price go through because they're like, we've got hundreds of thousands of lot size contracts. If you want to get some, we'll sell them to you, right? So they hold the price on that line. So price rejects perfect off that line, right? They take profit a little bit, okay? Price comes back up to that area, okay? They're not letting it go. They take profit a little bit, right? They took enough profit, price is coming down, but guess what? Retail sees an M. So what do you do? What you're taught to do? Sell the M, right? This is allowing more money to get created so that smart money can take it away from you.
Sorry, can you just repeat that bit, Jordan? You just cut out there for me.
Okay, this whole move is allowing smart money to take money away from retail, because what does retail do? They use stop losses, right? So this is where their stop losses are in the sell. What does smart money do? They take stop losses. They come take it from us, okay? So what if this is where their take profit is, okay, off of the order from down here, okay, their buy, okay, so this is their take profit, this is their mitigation buy. Maybe they added a buy to this position, maybe they didn't, okay, but the one thing's for sure is that they sold down here, okay, they're in drawdown, and they need to get out of that sell. And once they get out of the sell right here, price explodes. Maybe they bought more, maybe they didn't, but they at least got out of their sell, right? And so what they're showing is that since this is such an easy M, this is a target for them because there's more money up here to take away. So guess what? All the bears that are selling in here, okay, their stop losses are right here. as soon as their stop gets hit, guess what? Their stop flips for a buy, adding more buys, right? Now their stop gets hit, adding more buys, right? Eventually we take out this one too. Stop gets hit, adding more buys.
Essentially, they're using our stop losses, like you said, our stop losses for their take profits.
Yeah, pretty much. Because that's where a lot of money is. A lot of free money. Because the masses is taught this way to trade M's, and the people with all the money don't trade like that. They don't believe in M's. They don't believe in trend lines. They don't trade like that. We're taught the wrong way for a reason. To keep losing, so you keep working your job.
So what type of strategy then do you use, Jordan, in order to implement this then with smart money then?
That I trade where they trade. I know what they're looking for, and I buy when they're mitigating out.
So let me rephrase. So what type of like technical or like analysis do you do then in order to determine that position then?
The way you're not accepting what I'm saying. That's the problem.
Right.
You keep coming back to what technical analysis do I use because that's how we've been taught. No. I'm showing you my technical analysis.
The technical analysis is literally reading the price action from site. So where you can see how Jordan has marked out potential like stop losses and order blocks, he's using those as speculation towards where smart money is going, and like where retail are potentially putting positions, if that makes sense.
Okay.
Yeah, because it's like technicals can be anything, man. Technicals can be me drawing this Fibonacci from here to here. Okay, cool, we rejected off the 50. Maybe that was my target. I draw a magical trend line. I don't know to make this make sense in my eyes, but as you can see, I'm forcing it, right? But now guess what? I just made that trend line make sense, right? But other people can be doing this, right? Oh, well, that's against my rule. I've got to match up everything correct, so I'm going to do it right here, right? But guess what? And that's two different ways of drawing a trend line. Okay, and so now me and whoever that person is going to argue, right? But that's a way of using technicals, right? The way I'm showing you is my way of using technicals. I don't use this. I don't use this. I don't use any of this, right?
So essentially,
what? What's up?
Sorry, just essentially what you're saying is like just looking at the candles. That's like essentially like your analysis of what's happened.
It's called price action. Like that's the technical term for it. It's using nothing, naked trading.
Yeah.
But you're reading the price action, you're using the candles, and so since you've been doing it for so long and just understand what's going on, you just know what they're doing, right? Because you know how the masses thinks, right? Like exactly what you just like think about that, accept that. You literally are asking, right? And I'm doing this to really try to get you a breakthrough, right? So you're literally asking, right? And like 5 minutes ago or 5 seconds ago, whatever. What technical analysis do you use on this, right? But with all the other examples that I was showing you, okay? That's what the majority see trading as, right? Nothing changes. They like I'm telling you, like literally they'll do this. They'll draw lines everywhere, right?
Yeah, this is what I do.
Uh-huh. And so it's so hard to accept that you're doing it wrong. Because I can even say that there is no right or wrong way to trade. If you're profiting, right, then you're trading right. Your system works. I know heavy indicator traders that make money, right? They have a system that works. Cool. But the traders that I know that make a lot of money, they all trade with the banks. Okay? And so it's hard to accept that everywhere you look, everybody's trading the same. Right? It's all over here. It's all in our IML education. It's all, God, like, look at this. I went through their education, right? In 2016. Right? Oh, they've been featured on Forbes, blah, 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 blah. These are the scammers, too, of this world. CNBC and Forbes and shit. Right? And so when I come in here, okay, it's like, it's the same freaking material as everywhere else in the world. Okay, technical analysis. Let's see here. Okay, we got that. Nice. Higher highs, higher lows. Yep. Got all that. Yep, swing high, swing low. Oh, we got our support, but no one ever tells you that banks like to trade underneath support or above resistance. Right? And so it's literally the same crap. Okay? Oh, trend line. Ooh, like, you know, I'm telling you, this same stuff is taught everywhere, and that's why we lose. Right? And that's the hardest thing that takes forever to accept.
It's more so to do with unlearning than it is learning.
There you go. Yeah, that's the thing. And so my way of unlearning and all of that stuff is, I call them noobs, right? That's how I teach on IML TV. Where's your noob stop losses going to go? Where's your noob take profits? What are your noobs identifying? Right? I wonder if we can go in here. Hold on. What percentage of retail Forex traders make money? See if 96% of Forex traders lose money and end up quitting.
Wow.
Okay? That's on Google. Your 96% of Forex traders go through this.
Yeah.
Look, there's trend line right there. I'm telling you. We're learning it. That's the one thing, is you got to unlearn all the garbage that you learned. But at the fact that you're not unlearning it and forgetting it, you're unlearning it and using it as a weapon.
Yeah.
That's the big ticket. Okay. Here, I'll see if I can. I missed this trade, right? But same shit. Same shit. Ready? You probably already see it. Force candle down. There's the zone. Easy as that.
Yeah.
Right? There's the wick into it, and as you can see, it ran. Okay. Obviously, we're bullish long term on this because of this wick to the downside. Right? If you don't know what this is, go read about a pin bar. Okay. But what makes these accurate is the fact that I want you to imagine all the stop losses that are under here. I'll turn them red. Here. 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 Those are all your obvious duh stop losses.
Yeah.
Okay, and as you can see, we go through it and we grab it and we go. Okay, so I'm not saying you would have been able to grab this because the spread would have been stupid. But what we can is we can identify this, right? Cool. So this is where the whole market crash, glitch, whatever thing happened. But this is obviously bullish, so it's like, okay, where's smart money trading? Okay, well, this can be a force candle to the downside, stopping out these people who are late to the show, right? And it goes up. Okay, obviously we mitigate out right here. Okay, and we mitigate out again. but that was the play. No, I didn't trade it, but it was talked about, so I feel like I can talk about it, right? And then look. See right here?
Yeah.
Force candle up, really fast move down. So this makes it more accurate of an order block, right? Plus force candle up, maybe stopped out all these people, but really that crash is what gets our attention to that zone. Right? Because order blocks, I'm sure all of y'all know how to use supply and demand zones, right? Support and resistance, supply and demand zones, throw all that shit away. This is your new way of doing supply and demand zones. It's just more accurate, right? You're just guessing where smart money plays. That's your new supply and demand zones. Okay.
Awesome.
But yeah,
Jordan,
what's up?
Sorry to interrupt, man. Just a quick one. The force candles up and down. The reason for them is just to stop them out. Smart money to stop you out before going in their intended direction, basically, right?
Yeah, pretty much. So it's like, the last one that's really obvious is for me is this one, because I can think off the top of my head because I played it. But that, right? Where's your stop losses? All above here. For all this structure.
Yeah.
Okay, for some reason that candlestick looks kind of fishy, right? Fucking instant buy to take everyone out over here, right? And then we yank down, right? So maybe we couldn't have anticipated this buy. Maybe we could have anticipated this sell, right? But if we couldn't anticipate any of this, what we can anticipate is that they did buy and that they did sell and that they need to get the hell out of their buy, right? Finish off their sell. And obviously they were looking for down here. And that's what we were looking for. We just missed it. Okay? And so this fucker will probably keep going up above here. Right? More M's. That's all we're targeting. Pockets of money. Okay? But I'm going to leave it off with that. I got to do this Discord stuff to get that ready for y'all. Sanjay, we can work more on this together so I can get you 110% understanding so that you can break it down and get everyone else 110% understanding, which you probably understand it already. So.
Yeah, absolutely, man. Yeah, this is basically, well, obviously not similar in terms of the way you're trading, but yeah, I'm literally just trading price action, and this is a game changer, to be honest.
I promise this is the missing ticket right here. And once you start really looking at every candlestick and you're like, okay, did smart money buy sell here? Why would they? That's the question. Why would they buy sell here? Okay, well, it's targeting stops. That's how they trade. They always target stops because that's where freeing money is. So okay, what's their bigger thing? What are they trying to do? What are they trying to do?
Absolutely. No, I'm totally game for that. Anish Premsa, I'm sure it's probably quite a lot of information to take on, but this is literally like it's a game changer. Honestly, I'm lost for words. 'Cause this is like a sneak behind the curtain of what smart money are up to. This is how they operate on a daily basis. This isn't your traditional trading, like Jordan says, and like Jordan says as well, they don't want you to win. They won't be giving you this information out there. But yeah, Jordan, once again, just thanks for sharing and taking this time today to really go through this.
Yeah, man, and I'll send you the recording. We can do this anytime. You just gotta just let me know. I'm always on my computer. I love computers. I love video games. I love the charts, and I love researching. So I just stay inside.
Awesome.
So yeah, I'm always here for y'all to help y'all really understand this. But I promise, this is the bread and butter right here.
Jordan, just before you go, obviously, thank you for the call. Who is good to watch? I'm guessing you and IML TV. What else is there like we can read about or understand more about smart money? Is there any like resources or materials?
As far as the traders go, the only people that trade like this is me, Zachary Hogan, Rock and Sandy. And that's it. I don't believe anyone else does. I know Mike Navarrete, we're teaching him right now. And you guys really, but no one else in IML really trades like this that's known.
Okay. Any books or any like things to look at like that?
There's nothing.
No.
Would you say Wyckoff logic would be worth them looking into at all, Jordan, in terms of accumulation and distribution and whatnot? Or
Yeah, as you can see, accumulation takes place here, right? As you can see, distribution took place in here, right? So yes, 110% learning that. It's just Richard Wyckoff, he does not go into detail about any of this, right? And so that's fine, right? But it is very important to learn the market cycles or an accumulation distribution, because really the big kicker that you really need to learn, and y'all like learn from Sanjay, is this. Let's see if I can find it. Yeah, there it is. Okay, understanding where stop losses are going to be. So the stop losses are going to be all in this area, right? I drew red lines everywhere where stop losses would be, right? And then you have a force candle to the downside, right? Force candle to the downside, shitting on everyone, and then a fast candle back up. Well, guess what? You see it? I'll delete everything just so you can. Look at that. There's your force candle down and your mitigation out. Force candle down, mitigation out, right? And so this is called cycle accumulation, right? We want the spring. Okay. Bigger time frame. Another example. Accumulation cycle. Right? You have your zone right here. Your seller's climax, seller's test, come up. This is your spring. All in here. Right? So this is an area that you tackle. Spring. Okay, well maybe you didn't get that. Well, guess what? Go to your forced candles. Obvious force candle. What do we know? Okay. One more example. Alrighty. This is accumulation. How do we know? Price is literally doing nothing. It's just going sideways. Okay. I see our seller's test, our seller's climax, right? With our seller's climax or seller's test, we're just we're going nowhere. Right? And then all of a sudden, what do you see? A candle that shits on everyone, right? Right below all the stops. So of course we go. Okay, so yeah, accumulation distribution by Wyckoff is perfect. Definitely learning that is important to start there, but learning the forced candles is essential too. I would show you this forced candle right here. There's an order block right here off this side, but you can only see it on the 15-minute time frame. And I don't think I can go back to that. Oh, cool, I can. Cool, I put it spot on too. Look at that shit.
Oh, nice.
See? Okay, so you have your fast move up. Right? Force candle down. And then maybe you ask, well, Jordan, what's the difference between this force candle down, this force candle down, that force candle down, this force candle down, and that one? Right? This one goes below these stops. Okay? Right, there you go. Here's on the 1 hour, so it looks easier. Okay, maybe we'll bring it down a tad too to make it accurate. Right there. Look to the right. Oh my goodness. Oh, it's perfect. Right?
That's nice.
And then what do? They stop out all you guys. Right? Little triple top. Okay, I'm telling you, this is like clockwork, bro. I wish I had this. I sent it to Brooke. Brooke has it. I'd have to go and
Nice.
find her or go get that image. But yeah, it was just like that's what caused her to sign up. I was like, yeah, you're gonna buy right here at this price, and then she went and looked the next day. She was like, that's like perfect. She's like, okay, I'm
That's
signing up.
crazy. Oh man, nicely done.
It's just a whole game changer when you just flip your understanding. You're like, all right, they're hunting for stop losses all the time. I'm gonna go hunt for stop losses too.
Yeah, that's gonna be my agenda for this week. I'm just gonna be eyeing out those stop losses.
Oh shit! I think I got into a buy.
What on AU?
Yeah.
Oh.
Unless I took out my limit. Oh, you motherfucker! It didn't get me in.
Oh man, I've got a sell going on AJ at the moment.
Yeah.
About 68 pips deep on that. Yeah.
Nice.
Mm.
Nice, dude. I'm excited. I'm excited to freaking see what you do with this info.
Man, I can't wait to put it to the test. I can't wait to see everyone implement this because it's going to be so powerful.
Yeah, y'all
Once
better just
people start
not.
comprehending this.
Just don't mass share it. Teach it. I promise. Y'all are
Yeah.
gonna be the only team. Us. This
Mhm.
organization's the only people that trades like this. Right. It's why it's so different than anything else. But that's why we win.
Of
It's so
course.
funny. Our little 18-year-olds are just killing it. It's
Who was
so
that? Matthew, wasn't he?
Yeah,
He
it's
was
Matthew and all of
killing
them.
it.
Yes.
Killing it.
And he's the one that understood this first out of that team.
That's
So it's just like
fantastic.
he's good, man. And so this is all it is. This you're just figuring
That's
out where
brilliant.
smart money's playing and then going from there.
Love that.
Hello?
Hello. But yeah, so I'm gonna go ahead and shut it down. I gotta do this Discord thing. And,
No worries, Jordan.
well,
Well, thank